There were lots of great trading opportunities today. We're going to go with square here, but the key, or block, whichever you want to call it, but the key thing was every single trade that gave you your best results with the market moving the way it was today, you had to have a plan, you had to have a key level, and that's the thing. And when we had this level, and we actually had an alert for this in both directions multiple times on block, and I'm blowing up to 60 minutes just so you can see how significant it's been when it's been bouncing back and forth off of this 135 price, right? Like we've run away from it, we've gotten there, and then had these great bounces to the upside. You find that support, and then run away from it again. And that's what I like to see for a turnaround point. Now, when the market's looking like it's coming down this morning, and it was a very weak market, we're thinking to the short side of the trade, it's going to give you this opportunity for that short the pop type of trade. So a lot of times when you've got a floor like this, the short is into it in front of 135. It's not that really hard to figure it out. Whether you want to get in, just set it $1 before, 50 cents before, $1.50. You have to determine your risk to reward there. I like the 134 level. I wanted to give it about $1 and change. There's always going to be slippage in the trade. The other approach you can do is to allow it to hit the level and then try and find a curl. Now, the way the market is moving in these mornings has made it very tricky to be able to do that. So I preferred sitting there, knowing where I wanted to get in, and then just having my stop in case it blew through. After this, and the market's flushing and you've got in and you've got it good, it's just about where do you want to get out. Again, some predetermined areas that we're watching, if you look at it trying to fill this gap to the downside, you can obviously see about 132, and then you've got this hard level at 127.5, 128 that I've marked off. You get through that price, and the next channel down is your 125. It's really 124.5, but that's sort of splitting hairs. And if you look at what we're doing here, we chew. There isn't even a chance. That first level, the 132, there isn't even a chance. It chews through it, and you're just hitting bid and enter when it goes to that price and getting 50 cents better. But on that snap down, I'm always wanting to cover some when it gets to that first key level, because sometimes you get whipsaw action allowing you to get back in. Didn't happen. It only flushed from there. You're going to see it crack 130. Then all of a sudden, we're looking at that 128, 129 area. That's where we get out of the trade. And at the time, the market was trying to bounce there. I knew I wanted to take a shot at that 125. Could we have held a short into it? Very possibly, but the market had shown signs of strength, and we were at one of our key levels. And when that happens, we're going to get out of the trade. We did get that 125 when going counter trend. Sometimes I feel like it is better to allow it to test off a level first. It makes the bottom, confirms we like that low. We then test it again. You get a wick bottom again, holding the low of the day, and then entering the trade. And then it's a simple VWAP retracement, although I like to prefer to say you're getting it right to the last consolidation. Sometimes VWAP's a bit of a moving target. I care more where liquidity had come in, and liquidity had come in at about 127. So that's going to give you about $1 return overall average, $2 total move, and it gave it to you another time, but I didn't like the fact that we had violated that low several times. The difference with the afternoon trade, we'll go bonus side, because after the Fed made the move to the upside, it jackrabbited up, and then we get that reversal after the Fed meeting minutes. So you get to come right back into a liquidity replenishment point, which is at that low of the day, and then once again, rinse and repeat the trade that you were making before. That's the thing with a key price level. When you're able to revisit it, a lot of times it's good because there's liquidity around it. Sellers dry up and buyers come in, or vice versa. So when you get these types of events, like a rapid move downside, that's because of a lack of liquidity. Liquidity is likely to come in, or a better chance to come in, at those key price areas that you've already identified.